city for quite some time manage doing the projects that they want to do, while also considering that you got to pay the money back, and you've got to live within in your budget every year. To year 8, in that year, you see that your debt service goes from $950,000 down to $530,000, and then back up to $797,000. The $3 million wrap around. We have structured the new debt service to fill in that gap in the 8th year, and that's, Mr. Wallingsford, that's to answer your question. You know, that is why we did that. And so, if you look over the total overall payment, after 5 years, your debt service drops off close to $400,000, and you know, we have spent a lot of time with prior councils and prior mayors and some of you and Rick to manage the city's debt profile to where when you are in a position that you need to borrow money and do projects, you can do it. You can do that. And so if you look on fiscal year 2016, you've got $1,548,000 in debt service. If you look over under the total overall payment, you're at $1,562,000. So you add $13,000 in the first year. If you go down to the second year, you can see that your actual debt service payment for fiscal year 2017 will be less than what it was for 16, and you will be getting $3 million. So that's kind of how to look at this schedule. We have proposed numbers, which is why we suggested we didn't suggest, we just said that 7 years interest only. That kind of gives you a little bit of a break up front and allows you to do these projects. We can do 20-year level debt service if that's what you want. You know, some of the things mentioned earlier about you know, wanting to pay down the bond issue early. You know, there's an option to do that. Your typical bond issue has a 10-year option to prepay the bonds. We can actually do a 7-year call, so you'd have 7 years before you can pay off the issue. One other thing that we could do is if you ever had money that you wanted to pay off the bonds in addition, or before that 7-year period, we will actually sell these bonds to a lot of people in Scottsboro and all over the state of Alabama. We will know who owns the bonds, and we can actually buy those bonds back from the owner if you ever had money to pay off the bond issue early. To my knowledge, I don't think that the city of Scottsboro has ever paid off a bond issue early. So,
got a couple of questions.
Sure.
Okay. You show in your amortization a principal payback of $2.83 million.
Mm-hmm.
Can you explain that?
Yeah. So, are you familiar with how bonds are priced?
For the purpose of our...
Okay, so right now interest rates are really low, and when an investor buys a bond, they are paying for a coupon, and that's a guarantee to get an interest payment from the city every 6 months. And in turn for that coupon, right now interest rates are really low, so investors are willing to pay more than par, so more than 100 cents on the dollar for a coupon payment that's, you know, we'll call it 3%. So they pay over par to the city to buy that right for the coupon. And the premium actually reduces the amount that you have to borrow to get the amount of project you need. So in this example, the par amount of the issue is 2.83, so there actually will be, you know, around $200-something thousand of premium that will go into the construction fund account, and that lowers the amounts you have to borrow to get the money. So basically, they're paying over 100% to buy the bonds.
So at the end of the bond event, there will be $3 million there, but we're gonna pay back 2.83 million.
Correct.
I guess the other question that I had was, in your interest-only payments, you show an interest-only payment of $104,900 for those first 7 years. Can you explain to me how 3.35% interest only comes out to $100,500 and 3.23% comes out to $104,900? How does the lower rate come out to a higher payment amount?
How does the lower rate?
You have 2.23% quoted,
3.23.
or 3.23. Year 2 interest only payment of $104,900.
Right, hold on 1 second. So the interest payments are based off of the coupons on the bonds. And so it's not as, the bond calculations are a lot more, they're a lot different than a traditional bank loan. But basically, in order to get the interest, you would actually have to, multiply each, principal payment in each year, starting from the bottom, times the coupon, which, we'll be happy to provide all those rates, to you if you want to see how the math works. You actually start at the bottom, and you calculate the interest for each year, and it's reducing as the principal pays down from top to bottom. So, it's not as cut and dry as I wish it was. There might be another project down the road that you have to do, and folks wanted to make sure that would still be possible if you did go ahead with this transaction. Would you be able to do another one if anything, any needs arise in the future? And the answer is yes.
How much are we going to pay at the end of 20 years between the two, and then that's your answer? Is it not that simple?
It is if you can calculate it.
But did they not calculate it for us, both of them?
No, sir.
They haven't been calculated.
No,
Well,
sir.
Mr. Mayor, I think what you have to look at is, how are we paying the money out? And when does the interest start, right? If you're gonna do all these projects at one time, which I think is a potential disaster, I don't think it matters so much when you pay the money out. It's gonna be going out within a 12-month period more than likely. But if you stagger these projects, you could be paying interest on money for 2 years that you haven't used yet.
Well, the timeline that I was going to give you here in just a few minutes, that by September of next year, this should all be completed. That helps any. Just based on the timeline that I was given by the architects. All projects will be completed by, and it could be sooner than that.
I would agree with you though, if you are comparing.
Yeah, I did receive the timeline from Christine, the architect firm, this Friday afternoon late, and her estimate for the Veterans Field, which will be the first project, is to do open the bids in late July, and typically those start dates for construction is within 30 days after the bids. So that's July the 26th on the Veterans Field. The Heritage Center was bid opening October the 25th. On the Fire Station 3, December the 6th. And then the RecCom, January the 24th. And that will be a pretty long project, I would think, off and on. We don't know. She doesn't give us exact dates. That's why we're working with the September date. It could be a little bit sooner than that as far as completion of all the projects. So that's the latest that I have on that.
The last time when Christine was here, it was, I brought up about, we don't know how much money we're gonna spend. And I was told, just wait, that she's gonna speak in a moment. She's gonna give us her figures, and she spoke in a moment, she never gave us her figures. And to my knowledge, as of right now, we don't even have a clue how much money we need, yet we know how much we want to borrow. It was said that you could pay some of this money back if you borrowed it, and get the money off. But we all know that that's not a factor because we've never done that before. I don't expect, with times being what they are, they will do it now. As a matter of fact, I hold in my hand a request from the police department for 3 vehicles for $120,000, and we are going to wait till next month to see if we have the money. Now, there's something wrong when we can't afford equipment for our departments, yet we can go out and do all these other things. And that really concerns me. I know some of you think it's not a big deal, but I do all these things. And again, I just think we're being premature.